In the previous question we addressed, we dealt with that disjointed feeling that many folks are having these days. And that discussion around that disjointed feeling, of course, led to another question, which is, does this affect our 2025 outlook? And the answer is, at this point, not yet. Now, even if I put things in the most negative light possible, all that's happened is portfolios have risen slightly over January and then retreated in what is usually a very volatile month in a post-election year, in February. So the worst thing that's happened is that we've gone back to where we were at the end of December in 2024. Now, that's despite multiple, what we call in the business, tape bombs. You have tariff tape bombs, you have DeepSeek, and you have other issues that have rattled the market. And yet, the markets and portfolios still persist in and around their highs. And this is where I want to bring back an old Wall Street saying, which says that something that doesn't go down on bad news isn't bearish. Or put into another way, is that something that doesn't drop when the news is bad isn't something that is likely to drop very far. Now, of course, I could be very wrong on this, and old Wall Street aphorisms are you're certainly not trying to predict the future. But we also have to remember that as of the filming of this video, markets have displayed an enormous amount of strength in the face of what are some could be considered very, very negative headlines. So I think that's a major takeaway. The other thing is that none of the things that we've seen this year have invalidated any of the positive quantitative signals that we've seen at the beginning of the year. Now, the one example I do want to always cite is the January barometer, because it is the most researched. And that one just says that if the stock market is positive in January, the chances of the market being up for the full year are 91%, with an average return in the mid to high teens. So that signal certainly hasn't been invalidated, and what we've seen is what is a historically volatile month be volatile. So the biggest risk that I do see out there just continues to be Doge. Now, the Department of Government Efficiency is really an austerity program, and if they move as quickly as they appear to want to move, then you could see significant reductions in U.S. federal spending into the end of this year, which would create a headwind for U.S. growth as we look out 5 or 6 quarters. However, we are not out there yet. We're too soon in the process to have enough data in order to make a data-based decision, and we don't want to be reacting based on emotions like fear and greed. We know that that is also the path to ruin. So we'll have to wait to see the way things look. And the other thing is that there's also a positive case out there. There's an enormous amount of investment being done in AI, both by AI companies as well as businesses in general, which are looking to adopt these technologies. And one recent headline, of course, is Meta did announce that they're building a $200 billion supercluster of processors. Now, that is an enormous technology spend that they would not be doing if there wasn't a demand for that type of a product. So that type of technology spending could easily and potentially overwhelm any government spending cuts. So that's something we have to keep in mind. There's a positive case, there's a negative case out there. There are quantitative signals that are very positive, and despite the as I mentioned, the aforementioned tape bombs that have hit the market in the last 8 weeks, all we've done is basically churn around the highs. So at this point, no changes to the 2025 outlook. However, I am forever vigilant, and if the information changes, I am proud to say that I will change my mind.